Good morning, everybody, and welcome to today's Morning Blast. It is Wednesday, the 29th of April, all day. You join myself and Mr. Brown for the awesome, the epic, the Paul's Nose Punches Morning Blast, where we give a rundown of what's going on, a little bit of a rant, etc. Nothing said on today's podcast or any podcast is trading or investment advice. Do take everything we say with a grain of salt, do your own due diligence, etc., etc. But a busy day ahead. We got OPEC just lost a member, the Fed's about to lose a chair, big tech is about to confess what it's spending and indeed what it's earning, plus gilts are doing that thing they do when nobody's in charge. So strap in, Michael Brown.
Well, a very good morning to you, Ryan. Good morning, everyone. Happy Fed Day. Jay's last hurrah coming up a little bit later on. A happy hyperscaler earnings day. As Adam Linton said to me this morning, none of that American nonsense. Happy BOE Eve as well, ladies and gents.
Yes.
There is plenty going on for financial markets over the next 24 to 48 hours. And hopefully we'll be able to make at least some degree of sense of everything and give you a little bit of insight along the way.
Exactly. Maybe even give you a little chuckle. You know, it's the morning, right? Everyone needs a bit of a giggle in the morning, get them going.
Well, indeed. We'll try our best.
We'll try our best. We'll try our best.
Someone else who's trying his best.
Clive Lambert.
Indeed.
Yeah, exactly. He's under pressure now. Now he's in the same group as a couple of other people. He's kind of getting us our technical analysis over nice and promptly rather than 8:31.
I feel like he's got a little bit of stage fright.
Oh, no comment. Quick. Moving on. Right. Get your mind out the gutter, Ryan. Get your mind out the fucking gutter. Right. Equities from our dear, Clive, well, not just equities, but all markets in general. So market update from Clive Lambert at FuturesTechs. Starting off in equities, as usual. New all-time highs in overnight trade in the S&P got up to 72.23, then saw some selling back to 71.46 and a quarter in the day session trade where buyers returned. Daily reversal pattern in the Nasdaq. So Nasdaq futures saw some red and posted an evening star reversal pattern on the daily chart, but we're not doing anything to confirm it so far overnight today. In the DAX put on some red on its chart, but it's bid overnight. FTSE 100 is testing Fibonacci support at 10,328 still. It's all a bit mucky, to be honest. That's Clive's words, not mine. Maybe we need to get these central bank meetings out of the way. I'm not really sure if central banks are really holding back the FTSE, but there we go.
Well, yeah, Clive's not a macro guy. We can let him off.
He's a lovely guy.
Is
Bonds. Quick, move on. Bond futures saw red again yesterday. Gilt futures got down to 86.45, so that's eyeing the recent low at 85.91, which was the lowest print since 2014. And obviously, what do we know about gilts? Price down, yields up. More on that in a bit. This is obviously on the adjusted continuation chart for those now feverishly checking charts and going, actually, I think you'll find this on this date, on this expiry. Oh, get a life. Forex markets were pretty subdued ahead of Fed and ECB, etc., as you would expect. That one I agree on. Energy and carbon markets. Brent crude got up to $105.83, so the bulls are on top there for now. WTI also bid, getting up to 101.85 yesterday. 104.34 is the March 9th high on the June chart. So we want to keep an eye on there. And in European energy space, TTF, which is obviously the Dutch gas, which is also the European benchmark, posted another high wave candle. Oh, God. Another word for a small-bodied candle similar to a doji. So just say a doji.
He's just showing off, isn't he?
That's another page in the book I'm not going to read. If you've not already, buy Clive's technical analysis book. Someone's got it. Sticking pretty close to value in TTF at the 45 handle, 4500. So one to keep an eye on there. Feels like we've been mentioning 45 area for quite some time. EU carbon markets also taking a few days off, hanging around the €75 mark right now. So we're waiting fresh clarity there, favouring the bulls to provide it. Meanwhile, in metals and ags, gold, the yellow metal, sold off through 4,627, is looking lower in the short term on that basis. Boo. Silver tested an uptrend line yesterday. It held. That is at 72.94 today, so one to keep an eye on there. LME copper, London copper, saw red, but it's got a chunk of it back overnight. Good to know. Nickel, That was bid again yesterday, so did nothing to confirm the shooting star we posted on Monday. In the ag space, before I hand back to Michael, or get back chatting to Michael, corn was green. This is obviously US corn and US ags. Corn was green again, gain seen to 476.4, and is gunning for 481 next, then back to 487.4 high, and the spike from March. And finally, wheat, which is the ginger stepchild of the ags complex. Wheat also caught a strong bid through the 649.6 high and failure from March, now trading at levels last seen in June 2024. Interesting times in the ags market. Thank you very much, Clive Lambert.
Indeed. Thank you very much, Clive. Thank you, Ryan, as well. Let's start very briefly in the Middle East this morning. Once again, there isn't actually that much worth recapping this morning, which again, I would be classing as actually a relative positive catalyst, because we're not getting this daily trickle of leaks out of talks between the US and Iran. In terms of... Oh, were you going to say something then?
Yeah, so I understand what you're getting at. No news is good news, usually. But just something to flag. We are, day 60-ish of a locked Strait of Hormuz. At some point, no news is going to be bad news, because things are getting far worse on the supply side of everything that comes through the Strait. And we're talking, remember, we're not just talking gas and crude oil, but also kind of the distillates, etc., that come through there. We're starting to see meaningful impacts across the world on secondary effects. Particularly, jet fuel is obviously one key thing that's getting the headlines. But in terms of plastics, fertilizers, etc., I do think if we get a couple more weeks of no news, that's going to turn out to be bad news.
Yeah, I don't disagree with you on that one. I think trying to time when we get to that tipping point, or what the catalyst may be to send us over that tipping point, is a mug's game, to be completely honest with you. If you put a gun to my head and said what would cause the broader market to sort of focus on that, maybe Brent at 120, just because that would be a new high since the conflict started. And I'm sure Clive will WhatsApp me immediately with the precise decimal places as to when a new high would be printed. But yeah, I mean, I think you're right. I think the market is relatively, or in terms of risk assets, are relatively comfortable just kind of parking that concern for the time being. But, there is obviously the risk that concern does come back, and it could come back at any point. In terms of 119.51, there we go, as if on cue. Thank you very much, Clive Lambert.
Put it into Twitter, for fuck's sake. Put these comments in Twitter. I can't focus on too many things at once.
Well, thankfully, I don't suffer from ADHD, so I can, which is just as well for both of us. Anyway, back to the news from yesterday. There are only really two headlines worth noting this morning. The first is Reuters sources reporting late on yesterday that intelligence agencies in the United States are reportedly examining how Iran would react to President Trump declaring victory in the conflict. This examination is particularly focused on what such a declaration would mean in terms of the reopening of the Strait of Hormuz. The sources cited didn't give any sort of color or clarity as to whether this is just part of scenario planning or whether this is kind of a base case or a working assumption. But again, it just kind of comes back to the idea that, without wanting to sound too callous or coarse, Trump just kind of seems bored with the Middle East at this moment in time and wants to move on.
So I'm glad you said that, because when I saw that headline, I read that as basically Trump just wants to claim victory even though there is no victory. And what would the Iranians say in reply?
Yes.
That's exactly how I've read this. So potentially what this means is towards the end of, just feasibly, towards the end of the king being in Washington, and he is slaying in Washington, let's be honest, good on him.
He's doing very well, yes.
Some of his jokes, oh my God, they put us to shame. But yeah, there's every chance Trump could come out, just claim victory. There is no victory, but just claim it and move on to the next thing, probably Cuba. And basically they're going, well, if he did that, what would the Iranians do?
Yeah, absolutely. So certainly one to watch on that front. Also, speaking of Trump, we heard from the Wall Street Journal citing sources overnight that President Trump has instructed officials in the United States to prepare for what they're calling an extended blockade of Iran. According to these sources that the Journal cites, President Trump has opted to continue squeezing Iran's economy as other options would carry more risk than maintaining the blockade. Two things I would say to this just very quickly. One, this is, I think, the third kind of open goal that Trump has refused to take in terms of re-escalating the conflict, which again kind of comes back to what we were just saying, and he seems rather bored with the whole thing, as coarse as that sounds. And secondly is, and I really don't want to keep having to do this, because if you're a market participant who hasn't read the fucking book yet, then what are you doing? But to quote from Art of the Deal once more, my style of deal making is simple and straightforward. I aim very high and then I just keep pushing and pushing and pushing to get what I'm after. That's exactly what he's doing here, guys. He literally wrote down how he tries to negotiate.
Yeah, just on that, we're not saying it's a great book to read and read it to your kids. What we're saying is the president.
Oh no, I would not do business based on what's in this book. Don't get me wrong.
But it's the person that basically markets are moving on the back of. At least I'm trying to understand how he thinks. This is all we're saying. And if you haven't done that already, and during like his second term now, you don't deserve to be making money on kind of his decision making processes.
Yeah, absolutely. I mean, there aren't, I'll be honest, having read it, sadly, there aren't that many parallels that you can draw with, what you can apply to your own life or negotiations you may have to make or anything like that. But this is how the guy, this is the leader of the free world, and he really handily wrote down how he does business to everyone, and he is still doing business in that way 2, 3, 4 decades after it was published. So, it's kind of there as a bit of a free hint. If you're not using it, then what the hell are you doing? But anyway, we shan't dwell on that because we've actually got a lot to get through this morning.
Yeah, exactly. So next up, well, we kind of are sticking in the Middle East, but OPEC or UXit or whatever we're talking about. So obviously the news that, God, someone's going to come up with a better one than that, please. UAE.
Well, can I just say, I threw out both of those on the desk yesterday afternoon, and I probably got more abuse for those two than I've got for any pun I've made while working at Pepsi.
To be honest, when that landed in me WhatsApp this morning and I still had a bit of sleep in my eyes, I was kind of sitting there going, what the but I was just too tired. So I was too tired to argue and not smart enough to come up with a better alternative. So I was stuck with it. But yeah, so obviously the news, in case you've been living under a rock or whatever, is that the UAE have kind of unilaterally decided to exit OPEC. Now, we all know that OPEC was losing market share anyway. And, if anyone that follows OPEC meetings, God, we need a life. They've been increasingly fragmented, for a couple of years now, few years. Also, they're like, it's not like anyone's sticking to the agreed quotas. Everyone's kind of doing their own thing behind the scenes, etc. But this is the first meaningful, I wouldn't say, you can't, anyone saying OPEC's dead. That's bad take. Bat that away. But it's seriously wounded by this. Potentially one winner from this, because obviously we have OPEC Plus, right, Michael? And OPEC Plus is basically
OPEC minus.
OPEC plus Russia is basically what it is. So I would say this gives Russia a bit more kind of clout. But yeah, an interesting one. What are you thinking?
It is very interesting. The first thing I would say is that I wouldn't say the actual move itself is especially surprising because, as you rightly say, the UAE have been, without putting too fine a point on it, pretty pissed off with their OPEC quota for quite some time and have wanted greater autonomy. Maybe the surprising thing is the timing of this, but actually even that makes some degree of sense because if you listen to what the UAE energy minister's been saying, this has clearly been on the cards for quite some time. And actually the crude market is, we all know, hugely undersupplied at this point because the Strait of Hormuz is blocked. So as a result of that, the UAE announcing this move is basically, and it hasn't, had any impact on price whatsoever. Because although the UAE have said they are going to increase production gradually, that is correct, they are going to do that, they can't do that right now because they've got one pipeline that allows crude to bypass the Strait of Hormuz that is already running at its maximum capacity of 1.5 million barrels per day. So they simply can't increase output anymore. They need the Strait of Hormuz open as much as anyone else does in the Gulf. Longer term, what's this going to do to price? I mean, there's so many moving parts in terms of the crude complex at the moment that it's almost a mug's game trying to work that out. I would say potentially it's bearish over the really, really long term because you're looking at more production coming online. Our good friend George, who I will have to refer to under a pseudonym for various reasons, but he did want to shout out. So good morning, George.
I was going to do that.
Oh, well, I've stolen your thunder. He actually takes the opposite side of that, and he's thinking that it could actually be a more bullish scenario because basically it could just result in chaos and instability in the Middle East. So there you go. As they say, it takes two to make a market.
Tell you what, though, and obviously we've got to be mindful that these decisions are taken with kind of views on decades, right? This isn't something they're doing just to capitalize like tomorrow's trade price, right? These are things that have been kind of probably thought of in like the corridors of power, between that and the Dubai chocolate parties and etc. Please don't cancel me on the back of that, Dubai. But yeah, so we do got to remember that if what people are saying, and some energy analysts, rightfully probably saying that the Strait of Hormuz traffic through there will never get back to levels it was once at. Now, the UAE do have beachfront property on the good side of the strait. So if you are playing a very, very long game, potentially does this mean they're going to start, putting up, facilities and stuff on the nice side of the strait and trying to, and just bypass the strait altogether? And pumping oil through that way and then getting it to the ocean, getting it on the sea that way. All these things are obviously being gamed out, by smarter people than us. But if some Saudi royal, or sorry, some United Arab Emirates prince want to throw us some money and take us for a party, then I'm all for it. But one thing to note as well is this: yes, it was a surprise when the headline dropped. However, something to be mindful of is UAE have been kind of pivoting away from Saudi and OPEC for a little while slowly, because obviously they've been looking for independent trade and energy independence from Saudi. That's been their direction of travel for about 5 years now, in its like post-Abraham Accords posture. So this shouldn't be a complete surprise. I think it was probably on the cards already, but what's going on in the Strait has just opened their eyes and said, well, look, do you know what? Technically, lads, give us a couple of decades and we don't even need the Straits. Let's just go it alone now. But anyway, interesting times ahead. And, if you're an oil analyst, I think it's just one more thing to keep on your radar.
Well, exactly. And I think the nub of the matter is, right here, right now, doesn't change anything. If you're wondering where prompt prices are going to go or front futures are going to go, well, it depends on when the Strait of Hormuz opens and in what state it reopens, not exactly what's happening with OPEC.
But moving swiftly on, so this brings very briefly UK gilt yields. Now, there's going to be more to say about this, so we don't want to dwell too much on this, but 10-year yields are hitting 5%. This is... it's a decision. I think Goldman Sachs' recent note said the size of the term premium component is now larger than at any point since the post-2009 sample, which kind of, does that tell us it's kind of like a trust light tail? I don't know, but there's a lot of things at play here. If you've got a couple of words on this, and then we can quickly move over to Fed, and then we've got hyperscalers. But I think it's going to be something that's going to, if it carries on going, we're going to be talking about it a lot more.
Yeah, absolutely. And there are plenty of reasons for it to continue, given the political uncertainty we're dealing with here in the UK. Obviously, local elections next Thursday, and also the very, very perilous fiscal backdrop that we've covered at length in previous recordings. The one thing I would say is, before anyone kind of comes to us and goes, oh, why are you only talking about gilts when bonds are selling off all over the place? Yes, they are. But again, we're seeing gilts actually underperform their developed market peers. And actually, probably the biggest sort of evidence of that is the spread on a 10-year gilt yield over that of a 10-year treasury. Towards the back end of February, that was trading around 25, 30 basis points. That's now blown out to about 66 basis points. There is really no structural reason for there to be any spread at all between a gilt and a treasury of the same maturity and duration. And that basically tells you that the market is taking a very, very dim view of what's going on domestically here in the UK.
Yeah, exactly. This is very much a sterling-specific, UK-specific story, not just it's just following US rates. Definitely one to highlight there. Right, FOMC, don't let me be. Powell.
Indeed.
Oh, end of an era.
It is the end of an era, almost certainly, because obviously Kevin Warsh has not yet been confirmed to replace Jay Powell as Fed chair, although he will actually be having his his Senate Banking Committee vote at 3:00 this evening, and then a floor vote will be held shortly after that. So it is pretty much guaranteed that Kevin Warsh is going to be in place by the time of the next FOMC meeting in June. And as a result, it is the last time that we will hear from Jay Powell as Fed chair at the press conference conference this evening. In terms of what we expect tonight, there are going to be no changes to policy. The target range for the Fed funds rate, that will be held steady between 3.5% and 3.75%, with the vote likely to be 11-1 in favour of that, with Governor Myron again dissenting for a 25 basis point cut. And actually, it's Governor Myron's last FOMC meeting as well, because he will be replaced by Kevin Warsh.
Yeah, another absolute G. Go on, big up the Myron.
Only because he follows you on Twitter.
Mate, he's a good man.
As for the accompanying policy statement, which is also due at 7 o'clock London time, 2 o'clock on the east coast of the States, that's pretty much going to be a carbon copy of what we had previously, with the Fed reiterating that the implications of what's going on in the Middle East are uncertain. They will probably stick to describing the economy as having expanded at a solid pace, job gains remaining low, unemployment little changed, and inflation being somewhat elevated. There is next to no chance that they change their forward guidance either, which currently alludes to additional adjustments in the Fed funds rate. There is basically no chance whatsoever that they add an explicit tightening bias to that comment. As for the post-meeting press conference, of course, it is Powell's last one. A very emotional time for us all, I'm sure. Jay Powell himself is likely to basically stick to his recent script, repeating that the Fed is in a good place to wait and see what happens, while also noting that the current policy stance is appropriate. Of course, bear in mind, with this being Powell's kind of last dance tonight, markets are probably not going to be especially sensitive to anything he says in terms of forward guidance on rates, because, he's not going to be at the helm from the middle of next month. The one area that is still unknown, though, is what Powell plans to do next. Of course, his term as a governor runs until January of 2028. He has every right to see out that term if he so wishes. He said previously that he would be planning to remain on the board until the Department of Justice investigation concludes with finality. Only time will tell whether he believes that the Department of Justice investigation has now concluded and he is comfortable to depart. If he is, then of course Trump gets another pick on the Fed board, or whether Powell seeks to hang around and see out some or all of that term as a governor. That is really the only sort of area of interest or unknown as we move through the press conference this evening. Everything else should be, as much as these things can be, a little bit of a non-event.
Yeah, I think, I would be kind of shocked if we get any monetary policy questions from the reporters in the presser afterwards. It's all going to be about, politics and stuff like that. Yeah. Does he intend to go and sit on a boat and do a bit of fishing afterwards? That kind of bullshit. But yeah, but it's going to be worth watching just to say you were there.
Indeed.
Right, finally, hyperscalers, the big four, not the big four, but we've got big four hyperscalers reporting tonight. Obviously this comes on the back of the OpenAI kind of cutting capex, use your teeth. And huge revenue missed by them. Although I did chuckle that Microsoft took a bid on the back of that, because basically is everyone looking at that going, do you know what? Maybe they're not being hung out as much as they need to be.
So first and foremost, can I just say that the investor relations departments of these companies need to fucking talk to each other, because having all of this scheduled not only on the same day, but also at the same time, because all four of Amazon, Alphabet, Meta, and Microsoft report bang on the closing bell. This is just utterly ridiculous, if we're being completely honest. It is just too much information for the market to digest in one go. And actually, it's not, I was talking about this yesterday with a client, it's not actually in the interests of the companies in question, because, let's say, for example, and this is a complete hypothetical, let's say Amazon report really, really strong blowout earnings later on today, but the other three miss badly. Well, Amazon's earnings aren't going to get any sort of attention whatsoever. No. Their share price probably isn't going to see anywhere near as upside as it ordinarily would on the back of a really solid earnings beat. So I think this is a little bit foolish in terms of a scheduling perspective.
On that, and I'll stay, I will be happy to put my hands up and say, like NFP, you could give me the results of these earnings right now and I would still lose money. I've tried many times in the past over the years to try and trade on earnings. It's just fucking spin the wheel.
Especially with this lot, because,
especially.
because market participants are going to be looking, obviously with all earnings, we go, have they beaten on top and bottom line expectations? That's the first question. Then we go, what does the guidance look like? Is it a beat and raise? Because if it is, that's obviously bullish for the coming quarter or the coming fiscal year. But with these guys, there's a lot more moving parts because you've also got, where is that revenue coming from? So Amazon, for example, could beat on headline revenue, but if AWS revenue comes in soft, the market's not going to take that well because that's a sign of faltering demand in terms of AI. And it's similar with Microsoft and Azure and Alphabet with their cloud revenue line as well. There's also the issue of capital expenditure. Obviously the guidance for capex for the fiscal year ahead in their Q4 reports was just ridiculous. We're talking 180, 190, 200 yards worth of capex from all of them over the coming 12 months. Are they still seeing that as reasonable? Are they upping that guidance because this AI arms race is kind of going from strength to strength? Or are they looking to pull back a little bit? That's something else that the market is going to have to consider. And then, of course, on top of all of that, there is the issue of when you're going to get a return on this capital expenditure. And as we saw with that Wall Street Journal piece around OpenAI, it seems like that ROI profile is not only shallower, but also slower than certainly the people over at OpenAI were expecting. Is that impacting some of the other hyperscalers as well? So tons of moving parts. What I would say just in addition to that is this isn't a case of, you can sit there and go, well, I don't have any exposure to these four names. I don't care.
You do.
You do, because not only organically, if you look at the stocks we're reporting, Amazon are the fourth biggest in the S&P. Google or Alphabet have got a combined weighting in the S&P of about 6.5%. Microsoft are the third biggest in the S&P, similar in the NASDAQ as well. You've also got the fact that you're going to see moves in sympathy with these names. For example, if Amazon are massively upping their capital expenditure, think about where that capex is going. It's going to Nvidia, it's going to Qualcomm, it's going to AMD. Their shares are going to react on the back of that. You've also got Apple in the mix. They, of course, report tomorrow. Our market's going to read across from what we get tonight to what Apple may give us tomorrow night after the market closed. And also just in terms of sentiment more broadly, we know that the whole enthusiasm and euphoria around AI and how it's going to change the world has been really propelling risk assets higher. Since they bottomed at the start of the month, we're up 13, 14% in the S&P and in the NASDAQ. And that return of enthusiasm on that front is one of the big drivers. If that gets called into question, then you are likely to see sentiment sour on the back of that.
Absolutely. I forgot what we were talking about.
Earnings.
I'm joking. But also, when you say you haven't got a position, if you've got a pension, you've got positions in these companies. Let's be quite
well, that is very true.
Also, I'll tell you one kind of a clean play. Obviously, we talk about there's no real clean plays on these, but one kind of clean play that came to light yesterday with the OpenAI capex situation, and I believe we'll probably see the same today if we start seeing these other hyperscalers looking to cut data center capex and stuff, is copper. Copper kind of got a bit of got the ginger stepchild treatment yesterday because they're like, well, hang on, if this is a sign of things to come, and actually this frothy knickers as far as data centers is concerned is a bit overplayed, potentially that means not nearly as much copper is going to be demanded. Therefore, copper went lower, and that's exactly what we saw yesterday. So if you are looking for something outside of the box to trade on the capex, maybe copper's your one. But yeah, it's an interesting one. Obviously, there's going to be a lot of talking heads if, for instance, and God forbid, that all four of these underperform and they reduce their kind of forward guidance, they reduce their capex. This could be, this could shake the tree basically, and we could see a bit of fallout towards the end of the week potentially. Would you agree with that?
Yeah, I think so. You've got to remember the broader context here, as I just said. The market's up double-digit % on the month. You've also got the fact that the S&P and the NASDAQ are basically at record highs. Semiconductors, the Philly Semiconductor Index has rallied, I think it was 18, 19 days in a row. It's probably snapped that streak now. There is an argument that says the market is kind of priced for perfection going into earnings, which does mean that, and I'm not, this is not me outlining a structural bear case, but, if we do see a disappointment, then, of course there's the potential for some degree of pullback on the back of that.
Exactly that. Well, for somehow, and I, for one, have no fucking clue how, we've kind of shoehorned all of this in bang on half an hour. genuinely
we've done
shocked.
very well, haven't we?
Yeah, I think it's
ourselves
because
a pat on the back for that.
Yeah, I think it's because you didn't let me talk very much, and I'll just waffle. So we're all grateful for that. But Michael, my dear friend, thank you so much as usual. I'm actually around tomorrow for a beer if you fancy one. Oh, let me know.
Oh, hello.
Oh, well, a few of the old boys might be coming out. Oh, Clive, you get an invite as well if you want one. But yeah, listeners, thank you as always. Guys, girls, thank you for listening. Thank you for tuning in on the X Spaces. It's definitely much better than what we were doing on the live recordings on Podbean, just for our sanity. Yeah, whatever you're doing today, keep it tight, stay safe, wear protection, and we'll see you all tomorrow.
See you later.
See ya.